Welcome, welcome, welcome. Today we are going to be discussing the lovely topic of company structure as a digital nomad. Who here is an entrepreneur? You have your own business. Freelancers? Anything else? Remote workers? All right. Anyone wander in here thinking this was, not sure exactly what room they're in, thinking this was the polyamorous mushroom workshop? No? Good. Shade, good. All right, so I am Bobby Casey, self-assessed, sexy tax guy. You may know me better for my tax and residency solutions presentation. People say, why do you call yourself sexy tax guy? Well, Wojtek, if I help you save 50,000 euros a year in tax, how sexy am I?
Sounds pretty sexy.
Pretty fucking sexy, right? That's what I'm talking about. All right, so today we are not giving a full tax presentation. This is like a sliver, like one page of my normal presentation. Normally I give a tax and residency solutions presentation, and I asked Johannes, can I do like one piece of that? Because this is a pretty big topic, and usually I just don't have enough time in the bigger presentation. So I did do an unconference, and maybe I'll do another one about tax stuff. So I'm going to stay on point on company structure here. But just know all the other components when it comes to your tax residency, your physical residency, citizenship, family, business, that kind of thing. These all matter when it comes to your tax planning, not only business structure. They're all relevant. You can't just say, hey, I'll just register a company and that solves all my problems. That's not the way it works. So we're going to go through just the company structure piece. So like I said, if you've been to one of my other presentations, anybody ever been to my tax talk presentation? Like my tax and residency solutions, like my PowerPoint slide, not like the unconference workshop. Yeah, a couple of you, okay. So disclaimer, this presentation is only going to give you, it's going to give you general information about the right questions to ask and how to kind of think about where and how you want to structure your business to optimize. Who here has a business, like a company structure in place now? Something, like registered. Who here is registered in their home country? Maybe because you still live there, maybe because you don't know any better. I mean, that's a serious question, right? Because a lot of people, especially nomadic people, it's a complex topic when you start dealing with cross-border issues, and people think, nah, I'm Canadian, I'll leave the company in Canada because everything else seems way too complicated, okay? I can tell you, if you have your company registered in your home country and you're not a resident or a tax resident in your home country, unless you have a legitimate reason, like you have nexus in that country, you're selling in that country, that sort of thing, that is almost always a terrible idea. Almost always. I mean, if you're trying to optimize. If you're lazy and you want to pay tax in your home country because you feel a moral obligation to give away huge chunks of your money, then by all means, do that. But you almost always can optimize and have a better solution by choosing a different company structure if you pre-plan it. So, disclaimer, this is just going to get you started to give you some ideas where to think about, how to think about it, that sort of thing. If you need like detailed discussions, you will need at some point a consultation with somebody that knows what they're doing, okay? How many people here read something on like a Facebook post or talk to a friend, a blog post or something like that, and said, that looks pretty good, I'll just do that? Like, how many people are willing to raise their hand and admit that? I'm gonna do my best and not make fun of you, but hold tight, okay? Because that is generally the worst possible way you can go about making choices on your tax planning and your company structure, because those people aren't you, and your situation is guaranteed somewhat different than their situation, number one, and number two, even if they are a professional, they don't know all the details about your situation. One minor thing can completely change your structure there to make it better or terrible. And then in most cases, the people on these blogs and Facebook groups and stuff like that, I'm going to say this kindly, they don't know what the fuck they're talking about. They are like looking at things through their own lenses, and their lens is not your lens, and in most cases they're wrong. I'll give you an example. I had a Swedish client, I guess it's going on 2 years now. He did exactly that. He exactly read online that I should do this. Somebody told him he should register a company in Hong Kong. That would solve all his woes. He would exit Sweden. He would no longer have to pay tax in Sweden. He was going to bounce around Southeast Asia and everything would be glorious. And for 10 years it was glorious. He never paid tax to Sweden. He paid very little tax in Hong Kong, so it was wonderful. Everything worked great. Except he decided to move back to Sweden and resettle in his home country, and he re-registered, and they said, hey, where have you been? We see you didn't, when you exited here, you didn't actually exit in the correct way, because Sweden has very specific rules on what you need to do to exit. They said, where have you been paying tax since you didn't exit here in the correct way? And he didn't have an answer for them, and he owed over €1 million. I don't remember the kroner conversion, but he owed over €1 million in tax because he read some Facebook post 10 years ago and thought that seemed like a good idea. So, don't do that, Get some proper advice up front. So, factors to consider for proper company structure is, what's most important in your business? Anyone, give me an answer.
Money.
It's a hint on the page. Getting paid, right? I mean, I know many of you have these altruistic reasons why you're in business, but let's be honest, you still want to get paid, right? Like, you still want to get paid. And this is a pretty serious thing, because a lot of people think, I'll register my company in, I don't know, let's say Panama, and Panama has no tax, and that'll be a great solution for me. Well, how do you get paid? Oh, you get paid in Stripe. Well, that doesn't work with a Panamanian company. So if we were on a consultation, one of the first things I'm going to ask you is, how do you get paid? You tell me Stripe, we're going to go to the Stripe Terms of Service page, and I'm going to show you all the jurisdictions where you can have a company registered. And Panama's not on there. Neither is Belize, neither are any of the offshore havens, neither are a lot of options. There are a lot of options on there, and almost all of them do not work if you are nomadic, because they put you into high tax jurisdictions where you're going to pay a high company tax. So it doesn't work in most cases. So what we would do, we would open the Stripe Terms of Service page, we would go through it, and I would show you the 2 or 3 or 4 that might make sense for your situation. And then we would be able to narrowly focus down on that, okay? How you get paid is critically important. Do you get paid Stripe, PayPal, traditional merchant processing, crypto, cash in a brown paper bag, the gas station, I don't know, however you get paid, but you still got to consider how you get paid. Of course, if you're getting paid in a brown paper bag in cash, who gives a shit about having a company registered anyway, right? So, anyway, but if you're looking to scale the business, you might want to think about things like merchant processing, and now you have to think about where your company structure is. Tax structure, the tax structure of the jurisdiction where you're registering your company, okay? So, for example, some company structures in certain countries have high corporate tax. Do you want that? Does it make sense for you? Are you German selling in the German market? Maybe it makes sense for you to have a German company. If you're selling physical goods in Germany, in the German market, you're going to pay a high tax on that company, but if it's an opportunity you are taking advantage of, that's going to be the easiest solution for you, because having a company registered in, I don't know, Singapore, but selling e-com in Germany is probably going to create some problems for you. And technically you'd still be taxable in Germany anyway, so it doesn't really benefit you in that case. So you have to think about the tax structure. Do you want to pay tax in that jurisdiction? Does it make sense? Do they have a company tax? Do they have pass-through taxation? Some companies in some jurisdictions have pass-through taxation, which for many of you makes the most sense. How many of you have physical goods businesses?
Hi.
Okay, not physical goods businesses. So physical goods businesses, typically need to be registered in the jurisdiction where you predominantly sell those goods. Otherwise, you're going to have, or like for example, if you're selling in the European Union, it doesn't necessarily have to be an Italian company, but somewhere in the European Union if you're selling physical goods. Okay. Digital products, services, digital products, services, coaching, software, SaaS businesses, stuff like that. Okay, so all of you guys have virtual businesses, right? Or most of you, I mean, those of you raising their hand. The majority of you have virtual businesses. In most cases, now it's going to depend on your personal tax residency, but in most cases, then you're probably going to want to be in a jurisdiction that has pass-through taxation, because then it makes your life a little bit easier, and potentially, depending on tax residency, potentially a way for you to seriously optimize your tax situation. Client location, this can matter, especially for physical products businesses. I'll go into this in a later slide a little bit more, but for example, if you are an e-commerce seller selling in North America, a Hong Kong corporation is not going to be a good solution for you, because you might be doing it now because you've had this structure set up for a long time, but at some point this is going to break, because banks in Hong Kong do not like you to be doing business outside of Asia with a Hong Kong company. The banks eventually, when their compliance department catches up to it, they're probably going to shut your bank account down. I actually just had a talk 2 days ago with a guy, I don't think he's in here, but anyway, I had a talk with a guy 2 days ago who had a Hong Kong company and was having major banking problems now because he doesn't do business in Southeast Asia. Like, they're like hassling him to close the bank account and they keep giving him like threats. We're going to close your bank account. If you have a bank account giving you threats, they're going to shut you down. They're probably not kidding. Okay, it's probably a legitimate threat. You probably need to find a better solution for your business if you got banks threatening you. So client location can matter depending on the nature of your business. And the last one I got on here is personal tax residency. That can matter. Somebody asked me in the unconference the other day, can you not have tax residency somewhere? Yes, the answer is yes. Yes, you can, depending on your nationality and depending on a few factors. But for many of you, it's possible. Like, I think we had a Norwegian that mentioned something. Yeah, you have to be a tax resident somewhere. I believe it's 4 years after you exit Norway, or you have to be able to prove that you're a tax resident somewhere else, or Norway won't let you go. There's a couple of countries like that. But for the most of you Canadians, I got Canadians in here. Canadians, it's ridiculously easy to leave. UK, Germany, actually most of the EU, it's really easy to exit. Americans, how many Americans I got? Yeah, you guys are fucked. Yeah. You're going to be a tax resident of the U.S. as long as you have that blue passport with the gold eagle in the front. But there are a lot of loopholes for Americans, and most of my American clients that earn under about $250,000 pay no tax, zero, including self-employment tax. So there are options for you to optimize certain things. So personal tax residency matters. So like I said before, you've got to keep in mind company structure is important, but your personal tax residency matters. For example, I've got a lot of clients that live in Portugal because NHR was super attractive, or I guess technically still is super attractive until they close that window, whenever they finally come to terms when they're going to close that window. But that kind of thing is super attractive. But then if you register, let's say you register a company in Malta, because you can get a tax rate down around, I think it's 3 or 4% with the credits and everything. The problem is, if that company in Malta is really just a virtual company, you don't have an office, you don't have Nexus there, you don't have employees, that sort of thing. In the European Union, if you're working in Portugal, you have to consider company establishment rules. You're actually, technically speaking, I mean, you may be getting away with it, but technically speaking, your Maltese company should be taxed in Portugal as a Portuguese company. It should pay company tax in Portugal under EU company establishment rules, okay? So if you're doing this, playing the game and getting away with it, I mean, if you're willing to keep taking the risk, go for it, but you might want to think about, at least plan to start making some better strategy for you, because EU can be pretty tricky if you are living in the European Union with an EU registered company, not in that jurisdiction. Pros and cons of Estonia. Who are my Estonia fans in here? I apologize in advance. I apologize in advance because my opinion, for most of you, Estonia is not really a great option for virtual companies. I think there are some options for Estonia where Estonia can be a good solution. And when I say it's not a great option, that doesn't mean it doesn't work. It doesn't mean it is not a viable option. But I think there are better solutions than Estonia, because Estonia is just complicated. Pros of Estonia: simple and efficient company formation, especially if you have e-residency, or actually I think now if you have any residence card with the chip in it in the European Union and a chip reader, I think you can do that now. I think that changed recently. Access to EU market. So where I do think an Estonian company makes a lot of sense is if you have a physical products business selling into the European Union. Like, for example, let's say you have an Amazon business selling in North America and you want to move it to, or you want to add, if you want to add the EU as an option. So Estonia has no company tax. They have a profit distribution tax that ranges between 14 and 20%, depending on a couple of factors. So if you make 100,000 euros, you don't distribute profits out to yourself, then you don't pay any tax. But if you distribute out, then you pay tax on the profit distribution. But it does give you access to the EU market, making it easier for you to import goods, let me clarify. Makes it easier for you to import products into the European Union with an EU registered company and VAT registration. So I think if you are looking to access the EU market, and you're selling a physical product, I think Estonia, from what I have seen in the European Union, is probably your best option. It is probably your best option for that. However, for those of you selling digital goods, this is probably not your best option. There are better solutions for you. Again, it's not that it doesn't work, it's just there are better options that would make your life easier, simpler, and, for example, you don't have to charge all your customers VAT if you're not in the EU, if you have a digital product business. Cons: strict accounting requirements compared to other jurisdictions. They do have a monthly reporting. You'll need an accountant to do all your reporting, and then if you are VAT registered, that's a whole nother set of reporting there as well. And then it is relatively expensive to maintain all that reporting, whereas it could be simpler for you. All right, so wrap up, summary. If you're selling physical goods in the European Union, it's probably a good option. Digital products, and you are not you're not an Estonian person, probably not a great option for you. Lastly, if you have a physical product, a physical business, like with an office, warehouse, physical location, employees, that sort of thing, in Estonia, this is obviously a good option for you. Pros and cons of Dubai. Anybody got Dubai companies in here? Nobody. Wow. This might be the first time in a few years I've ever asked a crowd and nobody had a Dubai company. All right.
I used to have one.
What's that?
I used to have one, but not now.
Used to. Okay, no more. So tax-free profits on businesses in the free trade zone. There are some exceptions that apply there, some restrictions on becoming a free trade zone. Otherwise, you pay 9% company tax on most other type of companies. That makes it attractive. Also, for any of you looking to get tax residency in Dubai, because there is zero personal tax if you're a Dubai resident, you can register a company in Dubai and hire yourself, and then if you stay in Dubai 30 days, then you can be a tax resident of Dubai. So that would be a good option here. Cons: high upfront costs, cultural differences in dealing with regulatory bodies and banking and that sort of thing. And then it is complicated. The banking is complicated. I had a talk 2 days ago with somebody here who was having pretty big issues with his Dubai banking because banks in some other countries were not willing to send wires to his bank in Dubai. And so back to my first slide, getting paid is pretty important. So, this could create problems. But I'm not saying it's a bad option. I'm saying under certain circumstances it can be good. If you're operating in Asia, or if you're operating in the Middle East, or if you are looking for a personal tax residency solution, I think Dubai is a pretty good option for you. Pros and cons of Hong Kong. Anybody with a Hong Kong company here? It's got to be somebody. Just one. All right. Maybe everyone else has figured it out. All right. So low tax rate, 16.5%. Very good, like business reputation. There is some tax exemptions for non-Hong Kong sourced income, although it's getting a little bit trickier nowadays to have your income classified as non-Hong Kong income. It is an excellent banking jurisdiction. It is very highly regarded. You have all the access to things like Stripe, PayPal, good banking, all that stuff. Downsides, higher initial cost. You do need a resident director now to open a bank account for a Hong Kong company. So if you are not a Hong Kong resident, that means you need to hire somebody who is a resident in Hong Kong to open a bank account for you. That person will have signature authority on your bank account, so they will have access to your accounts. There are services that provide that function, law firms and registered agents that provide that service, but you will pay a fee, so that does raise your cost of operation. Hong Kong banks don't really like it if you're not doing business in Asia. I think Hong Kong is a good solution if you have residency in Hong Kong and you are doing a lot of business in Asia. For example, I've got one client who has a large 8-figure e-commerce store in the US, but he buys all of his goods from Asia. We created a Hong Kong company for him to buy all of his goods, and then his Hong Kong company buys them and basically effectively becomes the wholesaler, and then he sells them to his US company. But he does have nexus in Hong Kong. He has a small office with like a couple of admin employees and stuff like that. I mean, it's a pretty big business. And so he basically treats it as a separate company, a wholesale agency. And so it allows him to shift a bit of his profit into Hong Kong at a lower tax rate. So those types of things make a lot of sense if you are in that scenario. Singapore, this is almost a copy-paste from Hong Kong because they are quite similar. Very stable political, economic climate, excellent banking options, tax rates about the same. You do have some exemptions for certain types of businesses, especially tech businesses, software, that sort of thing. So you can get a lower tax rate than 17%. Like I said, excellent banking, probably the best banking center in the world. Their banking technology, the safety of the banks, quality of service is phenomenal in Singapore. You would have access to all the normal things, PayPal, Stripe, merchant processing, that sort of thing. Cons, strict regulations, same like Hong Kong, you've got to have a resident director or you can't open a bank account there. And nowadays, most foreign source income will be considered Singapore income, so it would be in most cases would be taxed in Singapore. So again, this is kind of a copy paste from Hong Kong. If you're doing a lot of business in Asia, you need to create a wholesale agency or something like that to shift profits around. This is what I call a hybrid company structure. This can make a lot of sense if you have a foot in Asia. Pros and cons of Georgia. I'm guessing nobody has a Georgian company here, but let's see. Anyone? I only put this slide in here because for some reason in the past year, I have been getting tons of people asking me about registering a Georgian company. Now, my guess is, and I'm not naming names, but my guess is there is a certain marketer in this space that writes about Georgia non-fucking-stop, and apparently Georgia has become a big question for people nowadays. Oh, I think Georgia's great, that sort of thing. Anybody spent time in Georgia?
Yep.
Lived in Georgia,
Yeah.
Tax residency in Georgia? Yeah. I like Georgia. I actually had my residency in Georgia for about 5 years. But anyway, so Georgia is an interesting option. I bring it up because it is a big question, and so I just wanted to address it for anybody if you are considering that. They do have a pretty simple company registration process. They have a 15% tax on distributions. Like Estonia, if you make 100,000, you don't pay yourself anything. You keep 100. You don't pay any company tax. You only pay the tax on the profit distribution. There is an option to be zero tax if you're in the free industrial zone, although that's not so easy to get qualified in the free industrial zone. That would be more for physical businesses, like if you're importing, exporting goods or that sort of thing, doing some physical work. And there is an option 5% company tax if you can get qualified as an international company. So it could be a viable option for you, especially if you're doing business in Central Asia, maybe Europe or Asia. However, my big issue is the banking sector. Anybody have a bank account in Georgia? TBC, Bank of Georgia? I have one. I have one at TBC. I have one at TBC. I had one at Bank of Georgia. It's okay. It's not ideal, and you could end up with some complications. I have spent way too much time on customer service calls trying to figure out that banking situation when I'm trying to get money out sometimes. But I don't think this is an ideal solution for most of you unless you want to live in Georgia and you are doing a lot of business in Central Asia. Like I said, I just brought this slide up because I get a million questions about this one lately.
But the main reason why people want to go there is because they're not in the common reporting standard, I think.
Right,
And
that is a big
it's
reason, yeah. They're
one
not a
of the
CRS country.
More or less only countries which is not in there, which is not in war or some other troubles.
Right, but, so you're right, they are a non-CRS country, so they're not reporting. Does everybody know or anybody know what CRS means? A couple of you. CRS is the Common Reporting Standard. It was a directive published by the OECD in 2016. Basically, it's an info sharing agreement on all the countries that signed this directive about banking regulations and stuff like that. Any of you logged into your EU or any CRS country bank account and it says we need to update your residency information? Yeah, well that's all CRS directive stuff. They're collecting what they call KYC information on you to track you for the CRS database. So they can all share information between those countries. It's what I call a pull, not a push. It's not like it's automatically sent to the tax office the moment you show up or something like that, but it is the tax office or the bank or whatever can query that database to find that information. Anyway, Georgia is not a CRS country. Some people like that because they don't report. But the flip side of that coin is subpar banking sector and having maybe some issues dealing with other countries that consider Georgia to be subpar. I don't know how else to say that. All right, bad offshore havens to avoid. I'm putting this on here because I get these questions all the time. Should I just register a company in Belize or Panama or Nevis or something like that? And the answer to all three of those is probably not. We actually even register companies for clients in Nevis, but it is for a very, very narrow niche situation, typically crypto-related stuff. And even then, I don't think it's a great option, but sometimes, I work with a couple of companies that have these crypto-related projects, and they will not sign up people from certain countries as account holders. They will only sign up people if they have companies registered in a range of countries, and Nevis is one of those, so we register Nevis companies in that case. But generally speaking, you're going to find conducting business with a Belize, Nevis, or a Panama company to be kind of a hassle. Anybody have a Belize company or Nevis, Panama, any of those? I've had Panama companies. I used to have my trust license. I own a trust and corporate service company too, and I used to have my license in Belize. And I dropped the license because I saw what the banking sector looked like, and I realized I could not in good conscience put clients in business there. I've met with bank presidents in Nevis, and I thought, oh my God, I would not put my lunch money in these banks. And Panama is not necessarily bad for any particular reason. It's just they were called out a few years ago in the Panama Papers, and now everyone around the world just thinks they're bad, so they kind of are bad now. I just had a client call last week with a guy who has a pretty large contract with one of his clients, and his client just moved their company to Panama, and now he can't get paid because his bank won't receive money from anything in Panama. So his client, the Panamanian company, had to open a crypto exchange account in Panama, send the money there, convert it to crypto, and pay him in crypto because none of his banks, he had 6 bank accounts, and none of them were willing to receive money from a Panamanian bank. And you're going to run into all that. You're going to run into that with all of those jurisdictions. Also, I mean, like any other offshore jurisdiction, you're never going to get a merchant processing account, or at least not a good one. You're never going to get Stripe. You're never going to get PayPal. You do business with clients in Europe or in the US or in Canada, and when you send them an invoice and you have a Nevis address on there, and they're going to, their bank is going to ask you, or ask them, let's say you have a Nevis company and you send an invoice to a client, their bank is going to ask your client a million questions on sending that money, so it creates a lot of problems. So I would just avoid them in general, unless you really love spending a lot of time jumping through hoops. Pros and cons for good offshore tax havens. In my opinion, the good ones are the British Overseas Territories. Basically, any of your BVI, Anguilla, Cayman Islands, Gibraltar, Guernsey, Isle of Man, I'm missing a few, but generally speaking, they have British oversight. And so only because they have British oversight, they're kind of considered clean jurisdictions and not blacklisted everywhere in the world. However, cons, you're still going to have expensive banking, and you're still going to have payment processing issues. So, and I'm saying this, I own a trust company in Anguilla, and we do offshore company formations, but I'm telling you, an Anguilla company is not a very good option, and none of those are a very good option for an operating business, because you're going to have issues. Anguilla or BVI or whatever, they're very good for holding company status or hybrid company structures. A good example here, anybody live in Costa Rica or have residency in Costa Rica? I think we mentioned this, so we'll hit on it again. So Costa Rica is what I call a tier 2 country. They are a residency-based territorial tax system, meaning if you're a resident of Costa Rica, you only pay tax on the income you earn within Costa Rica. However, if you have a company like a Wyoming LLC that is passed through taxation, Costa Rica considers that personal income making you taxable in the country. So they consider that territorial income if it's anything that's passed through. Or a Canadian or a UK limited partnership, those types of things would be considered personal income in Costa Rica. So having a holding company in place, having that Wyoming LLC owned by an Anguilla company, and then paying yourself a dividend from Anguilla eliminates your taxation in Costa Rica, because then the income is considered non-Costa Rican based. So that would be a great solution for a good offshore tax haven. Pros and cons of a UK company. I bet there's got to be a bunch of you that have UK limited companies in here. So pros and cons of a UK limited company. Trusted, recognized business entity. It's very good for international business, international trade. Great banking options. Very well recognized, very well respected. Nobody raises their eyebrow when they see an invoice from a UK limited company. Access to the UK and EU markets. Downsides are they do have some pretty strict reporting requirements, and you have a 19% company tax on all worldwide profit. Pros and cons here for UK limited company. Again, if you are running a virtual business with digital products, you will be stuck paying 19% company tax if you keep it running through a UK limited company. I think a better solution would be a pass-through taxation situation, which I'll discuss in a couple of later slides. UK is good, again, if you're trying to access the UK market, you're selling physical goods in there, you need a UK registered company, UK VAT, that sort of thing. I have a similar example to the other client, but I have one client who sells a lot in the US market. He has a Delaware LLC, but he buys all of his goods in the UK from UK suppliers. So he does exactly the same thing. He has a UK limited company. The UK limited company sells the products to his Delaware LLC, and then the Delaware company is the retail arm or retail end of his business. And we do some other things, some more complex stuff to minimize his tax in the US. But on the UK side, basically he sells his products from the UK to the US almost at cost, so he has a very nominal amount of tax he pays in the UK company. I mean, 19% of $100 is really not that big, right? So that could be a good option. This is, again, another hybrid company solution if you're selling in the UK market. UK LP, flexible. So LP is a limited partnership. So flexible and tax transparent structure for partnerships that is passed through taxation. Good banking options, again, it's the UK, so good banking options, well recognized, that sort of thing. In my opinion, it's more suitable for investment projects, not necessarily an operating business. It's not to say that it couldn't be used for an operating business, but sometimes it's not so highly regarded for operating businesses because it's just perception. It's just a perception thing. People consider limited partnerships more common for investment projects. If you're doing real estate projects in the UK or some other type of investment project. And it is a little bit of a complicated structure. Does anybody know the structure of like an LP? Anybody ever done an LP? Okay. So an LP is a limited partnership. You have to have a general partner or a GP and one or more limited partners. And so if you have a liability associated with the activity of the business, then all of that liability falls onto the general partner. So you sell a widget, somebody dies from eating your widget and sues you for $10 million. Your GP has 100% of the liability associated with that. So the only way to minimize that is we have to create another company to be the GP of your limited partnership so that you don't have personal liability associated with the operation of that activity. And then that's what makes it a little bit of a complex structure because we have to have at least two entities in place there. And that can also complicate tax things because you have two owners of a partnership. Pros and cons of a Canadian LP. This is almost identical to a UK LP. One of the big advantages, though, to a Canadian LP over a UK LP, one of the nice ones is there's no annual reporting for anything if you don't do any business in Canada, which is kind of cool. Like you don't even have to tell them anything. I mean, you have to do your annual report for the limited partnership, but I mean, no tax reporting. You don't have to do any filing or anything. However, if you do have any business activity in Canada, then it does get a little messy. So it does add some additional compliance if you do anything in Canada, or if you have a Canadian resident who owns it. So that gets a little messy as a partner, a GP or an LP. And then lastly, it's not impossible, but it is a little bit difficult to open bank accounts if you don't have a Canadian resident on there. Again, not impossible, you just have to jump through a few more hoops to get the bank accounts open for the LP if you're not Canadian or a Canadian resident. Pros and cons of a U.S. corporation, like a C Corp. I'm talking specifically about a C Corp. Anybody have a C Corp? Only a couple of you. 3 or 4, looks like. Okay, so pros and cons of a C Corp. So first of all, for you non-Americans, maybe you don't know this, so I'll tell you. There is no such thing as a U.S. corporation. No such thing. Like in Europe, you have a German company, you have a Dutch company, you have a French company. There's no such thing as an American company. The U.S. has 50 states plus several territories. Companies, corporations, and LLCs and other entities, they're registered at the state level, not the federal level. I generalize the topic with U.S. corporation, but just to be clear, there's no such thing as a U.S. federal corporation. You would register a corporation in Delaware or Wyoming or Florida or Nevada, something like that. So just to clarify, don't go looking up and go, Bobby's wrong. There is no such thing as a C Corp, a U.S. C Corp. They are state and territory. Like Puerto Rico is not a state, but you can register a corporation in Puerto Rico. And DC, actually. So access to a large market, various business support services. It does give you a lot of access, especially to banking, payment processing, lending agreements. I mean, my God, in the US, you can get a loan for literally anything. If you are doing e-commerce and you want loans to finance your inventory, I mean, all you got to do is like look left or right and somebody's trying to give you a loan for your inventory. So, I mean, if you're trying to scale your business, the US could be a good option for you because, I mean, all of that is available. There are excellent banking and other financial services, like I mentioned, and it is specifically Delaware is the best option if you plan to raise money from investors, VCs, or you're planning to get large credit lines. Now, large credit lines, I'm talking like in the tens of millions. I don't mean $100,000 or $250,000 credit line. In that case, a Delaware C Corp is going to be ideal. The reason being Delaware has a very specific court system for businesses, and your lenders will prefer you to have a Delaware C Corp because if they need to sue you, disputes get resolved much faster. So it's an advantage for them for you to be a Delaware C Corp. I had a client a couple of years ago, like 4 years ago, we registered a Wyoming C Corp because it's way easier, so much less hassle than Delaware. We registered a Wyoming C Corp for him, and then he got an investor that wanted to put in like $4 million into his business, and they said, we're willing to put it in, but only if you move the company to Delaware. So what do you think? What do you think we did?
Delaware.
Yeah, you're right. We moved it to Delaware, right? So like, it is not necessarily any difference for you legally, but it is an advantage if you're trying to raise money because your lenders will look more favorably upon a Delaware corp. If you are not looking for that, I would avoid Delaware, to be honest. Delaware is a hassle to deal with. It's expensive. If you're like 5 minutes late on your annual report filing, they tack on late fees. Especially for corporations, it's super expensive. I had one Delaware C Corp we renew every year. It's $46,000 a year to renew his C Corp. $46,000 a year. If he had that company registered in Wyoming, it's like, I don't know, a couple of $100 because of the number of shares and the value of his shares. So in Delaware, they treat it completely differently. So don't do Delaware unless you absolutely need it. I would even recommend if you're starting a business and you think 5 years later you might need it, let's start it in Wyoming first and let's move it to Delaware because it's so much a hassle to deal with. Everybody reads all about Delaware, how amazing it is. Yes, in that scenario it is, but if you don't need it, avoid it. Downsides, complex tax regulations, lots of compliance, and right now it's a 21% corporate tax. However, there is a way to cut that corporate tax in half. It's a loophole that if we create an offshore subsidiary and we run all your profits through your offshore sub, we can get you a 50% corporate tax rate deduction. So depending on the structure you're doing and the nature of your business, you might be able to cut your corporate tax rate in half. So a C Corp might be a viable solution for you if all of the other things make a lot of sense. Pros and cons of a U.S. LLC. I bet a bunch of you have an LLC in the U.S. Anyone? So same like corporations, there's no such thing as a U.S. LLC. They're registered by the state. You can see down here, these are the most common ones that we register LLCs for. Wyoming, Delaware, Nevada, Florida, or New Mexico are the most common. And to be honest, Wyoming, we register a lot of LLCs literally every day, and 70% of the companies we register are Wyoming. 20% are the other 10% is everything else. So flexibility in management structure, pass-through taxation. It is excellent if you're not an American. By the way, did anyone know the U.S. is the largest tax haven in the world?
Yeah. Yes.
Anyone know that? Yeah. Largest tax haven in the world by a very large margin, by the way. Actually, if you add up assets under management in all of the other tax havens combined, the offshore assets in the U.S. is bigger than all of the other countries combined, except just not for Americans. It's just not a great tax haven for Americans. What makes it really nice, though, is if you are a non-U.S. person and you do not have Nexus or ECI. Nexus is a physical connection to the jurisdiction, like an office, a warehouse, employees, that sort of thing. And ECI means effectively connected income to a trade or business in the U.S. If you don't have Nexus or ECI in the U.S., you have no tax, and you're not a U.S. person. Okay, U.S. person meaning you're not a U.S. citizen or green card holder. So you're not a U.S. person and you have no Nexus or ECI, then you don't have a tax obligation in the U.S. You do have a tax filing obligation, but you file 2 forms 1 time a year, and that's it. One of the forms is 3 pages, and one of them is an income statement, so it could be 4, 5, 6 pages. But it's a one-time filing you file once a year, making it ridiculously easy, and you have no tax obligation. So, non-U.S. person, this is great. Now, the downside over here, depending on your tax residency, like I mentioned before with Costa Rica, if you are a Costa Rican resident, pass-through income into Costa Rica would be taxable to you in Costa Rica. So that would be a case like where you might want a hybrid structure with or not a hybrid, but a holding company structure in place to retain those earnings. Simple banking, access to Stripe, PayPal, merchant processing, I mentioned a company, states, complex tax filings and regulations if you have Nexus or ECI, although there are ways to optimize that. There are things you can do. For example, you can break out pieces of your business. I have another client. I think he's German also, but he has an e-com business in the U.S. Pretty good size, 7-figure e-com business, but he does a ton of digital marketing. So the e-com business, it has ECI because he sells physical products into the U.S. market. So he does create a tax obligation there. However, he created a digital marketing agency to outsource the marketing of his product business to the digital marketing agency, so that allows him to strip some of the profits out of the physical product business. And the digital marketing agency, because it's virtual and it does not have ECI or Nexus and he's not a U.S. person, that piece of the business is not taxable in the U.S. So we were able to strip or reduce his tax rate a lot by having a hybrid company structure, splitting it in two. I think that's pretty much it. So this is my contact details. That QR just takes you to my website. I have another slide. I'll give you guys a minute if you want to take a picture. Like I said, if any of you want to join the WhatsApp group, I'll send the slides out in a PDF document. Any questions?
Do you have any slides covering sort of the hybrid structures? Because I guess mostly you were covering like this is good as an opco or not, but some of those options I guess could be good as like a subsidiary or not.
There's no way for me to have a slide covering hybrid structures because it's so particular to your situation. Here's the WhatsApp group if anybody wants to join it. If you join that, I'll drop the slides in there. You can ask questions in there. I did offer if a couple of people want to do like a free consultation. I'm going to video it though, but if anyone wants it, you can shoot me a message in there and tell me you want it. Any other questions?
What does the typical client pay for your services?
It depends. Our company structure business is a couple $100 to register an LLC. That's no big deal. But you're talking about tax consulting, that sort of thing? We have a membership program, and members pay like an annual fee, and then you get consultations. It's less than $2,000 a year, and then you get consultations. Plus, there's a lot of other things. Or you just pay me by the hour. My hourly rate's $4.45 an hour.
You mentioned complications in Costa Rica as a private residency, right? But isn't it a non-territorial tax system there? So why does it create complications?
Because pass-through income to a human being that is resident in Costa Rica, that's considered personal income, territorial income.
Is it the same for all non-territorial countries?
No, but that is the case for Costa Rica. What's another one? Paraguay, for example, it's not. That's not the same thing in Paraguay. Costa Rica, though, it is. You would be considered, if you had all of your income running to a Wyoming LLC, you made $100,000. I mean, if you don't report it, you don't report it, of course. That's on you. But, I mean, technically speaking and legally, you're supposed to report that, and it would be taxable in Costa Rica.
Yeah, thank you so much for the information you're giving us. It's not bad. So, for a resident in Costa Rica, like myself, can the holding company that you mentioned be an LLC in the U.S.?
Can it be what?
LLC.
An LLC in the U.S.?
No, because if it's an LLC in the U.S., it's still pass-through. It's still, because an LLC can't retain earnings. Any income for an LLC is considered the income of the individual that owns the LLC.
But then there's no need to have a holding company if you are resident in Costa Rica, if you have an LLC in the U.S., because the money that comes from Costa Rica, you can put it under the LLC, and then the rest of the money maybe under the company.
That's not true. That's not legally the way it works in Costa Rica. If you earn money, if you're a resident in Costa Rica and all your income comes from a U.S. LLC, in Costa Rica, that's personal income, which is taxable. Now, whether you report it or not, I don't know. That's up to you. If it flows through a holding company that does have the ability to legally retain earnings, then that's not considered personal income to you because you don't own the LLC, the holding company owns the LLC, and then you get a dividend from the holding company, which is considered non-Costa Rican source.
I think I got it right, so I don't want to monopolize that, but I think I got it right. So I put all my income through my LLC in the U.S., and then my LLC in the U.S. is billing my company, my Costa Rican company.
It pays your Costa Rican company.
Yes, precisely.
But who owns the LLC in the U.S.?
Myself.
Okay, then.
My own name.
Right. So then that's not correct. That's passing through to you if you own it.
So I should have a company that owns the LLC in the U.S.
Yes,
instead of
correct.
myself.
Yeah, but not Costa Rican because now it's just Costa Rican source income again.
Can you open up an LLC with a corporation? No.
What do you mean?
with like Cayman Limited.
Oh, yeah. Like, we do that all the time. We have Anguilla Company owns Wyoming LLC. We do that all the time.
And when then the Anguillian Limited pays dividends to the Costa Rican,
Yeah,
then it's tax-free.
correct. Yeah.
Ah, okay.
Because it's Costa Rica. Now, like, if you were in
Can it be
Germany,
just
that's not
one-
the case, right?
Yeah, I know. That's Germany, I know.
Yeah.
but I get it. It's not so easy to make a limited an LP with corporations in Germany.
Yeah.
I think also in
Right, in Germany you can't. You're
Yeah.
correct. You cannot. But in the U.S., literally anybody can own it. Okay? Any other questions? We're done? We're done. You supposed to